Welcome back to the show. I'm Foreman, your host, and today we're going to be talking about my portfolio. In particular, the UK stocks I bought and also the stocks that I sold, as this has been quite a big week in the markets, especially for my portfolio. As according to Google Finance, the FTSE 100 is down 0.02%, so it's pretty much trading sideways. The FTSE 250 is up 0.71%, and the S&P 500 is up 0.84%. However, my portfolio, guess what, is underperforming yet again and is down 2.43%. And if you like the video, please drop one of these to help beat that YouTube algorithm. As usual, my portfolio is underperforming. However, I've come to accept this. This is a normal thing in the markets, especially when you hold a small handful of stocks. Perhaps this is an elusive way of myself acknowledging that I'm underperforming the markets, but also denying it at the same time. I don't think I'm clever enough for that. Regardless, the point I'm trying to make here is that since I only hold 5 stocks in my entire portfolio, it makes more sense that I am consistently underperforming as I do not conform to the average or that similar to that of the indexes, be it the top 100 companies on the London Stock Exchange, the FTSE 100 weighted by market capitalization, or compared to likes of bigger indexes like the FTSE Russell. Because I have that lower number of stocks in my portfolio, it therefore means that if one's underperforming, it may drag down the entire portfolio if the others are only just about trading sideways. But what I hope for is that in a time where their valuations are fairly met, because I do believe a lot of these growth stocks I hold are undervalued, I hope at that point, once one of them does well, perhaps even, let's say, on a very good situation, doubles in share price, that it's going to drag the rest of the portfolio upwards. But until then, I'm going to be underperforming. Starting up with the top riser in the portfolio, Team 17. This stock had climbed by 1.84%. This has been following on from the hype following their recent acquisition in the US for $26.5 million. This was an edutainment acquisition that had already had great deals with certain brands like Lego. This opens up the capabilities of Team 17, allowing them to expand not only geographically, but also diversify their audience. Typically, they were arcade games, and arcade games, I will admit, are limited to those that are interested in arcade games. Whilst these games do have a wider appeal than, for instance, let's say AAA first-person shooters, they do also target there are ages that they aren't going to target because that's natural in a market environment. However, with this new acquisition of the edutainment applications, I believe it's Story Toys, what they can do with this is now target a much younger audience. These kids can learn and also play these games at the same times. This creates a complex where these kids are looking to buy more, they want to play more of these games, and their parents are funding it. So if you really wanted to look after your kid, and I know nowadays you just give them an iPad and they're distracted, surely if you were like, okay, well, it's about £4 for an app, is that I'm going to be hassled for the next 4 days? You know what? Screw it. I will just buy the app and have a bit more time to myself. Not all parents think like that, and in truth, I may not do the same myself because I don't even know. I've not thought that far ahead, to be honest. I'm 21 years old. Kids are well out of the picture, in my opinion. The point is that I think this is an effective acquisition. Sure, it is in the US where valuations are higher, but I think this brand is already cash generative, has a lot of potential for the future, and so watching Team 17 continue to climb is a good thing to see. However, in the last 2 weeks, they've had a fantastic run up of over 10%, and so it was natural that during the mid of this week when they peaked, that they would start to decline. I've been waiting, and maybe if they decline a little bit more, I'll be looking to purchase more shares. And if you'd like to sign up to my stockbroker Freetrade, click the link in the description down below to get a free share worth up to £200. Typically, the top faller in the portfolio, as per usual, is the likes of Argo Blockchain, which is down by 10.59%. And in fact, I bought more shares. And this may not have been a wise thing to do, and I will likely do the opposite. I will justify why I shouldn't have bought more shares, but I'd done so anyway, to prove that in this moment in time, I didn't really follow logic in the decision. I just wanted to lower my average share price and bought more. And in the last few weeks, if you've been following quite keen, I'd grown a little bit suspicious of Argo Blockchain because they were very silent about the whole NASDAQ listing, and it was widely speculated, and I did follow the hype on that regard, on that they would list on the NASDAQ, see fair evaluations of the competitors like Marathon Patent Group and Riot Blockchain. However, only now have they announced that they are exploring potential opportunities for a secondary listing on the Nasdaq, which is good and bad because one is confirmation. This is a confirmation that yes, there is a chance that they will list on the Nasdaq and it wasn't just rampant speculation, or it isn't now. However, it does give me a bad taste in my mouth for the management. They have a very strong follower base in terms of the shareholders that have bagged earlier in the year. However, now I'm a little bit more suspicious. They're sneaking in shareholder dilutions by taking on aggressive Bitcoin-backed loans that expire in 6 months' time. This is a sneaky way to say that likely in 6 months' time they're going to dilute the share pool to pay off the loan, or they're gambling on the price of Bitcoin rising. But if it falls, it does look like they're unlikely to part with their hodl of Bitcoin on the balance sheet and very likely to then dilute shareholders. After all, they were limited because I believe they diluted shares by around 20%, and legally in a year without applying for something more on the London Stock Exchange, you cannot dilute any further. So they're likely waiting for this period to cool off so that then they can buy more or dilute the shareholders more. Which, don't get me wrong, is an effective growth strategy primarily for the type of business. However, for the shareholders, this isn't necessarily a good thing and has certainly damaged my long-term views of the company. I did see this as a long-term hold, and perhaps I will have some exposure to it in the longer term. However, I know for a fact that once the Nasdaq listing is either confirmed or denied and the Texas facility is up and running, I'm going to trim the position. I'm likely, hopefully, going to take profits. My average has been lowered quite considerably in the last few months, and so I hope that my shares will be up well enough so that I can therefore trim the position and reduce the exposure. I understand in diversification is protection against ignorance. However, a position size the size of what it is, which has got to be at least 20 to 30% of my portfolio, that is an unnecessary risk. And so what I need to do is wait for the shares to hopefully rise, although this is more speculation, but I do have the share price drivers for it, and then trim back. I've noticed, and this is since the start of the YouTube channel, or at least at a similar time to when I started investing, that I'm certainly a lot more stressed. And so I'm only speculating here, but I imagine that perhaps my comfort for volatility wasn't as large as I thought. With Argo blockchain shares being down around 40%, my stress has been worse than ever. So I suspect, and it could be, this position that is certainly making things worse for myself. However, at the same time, this could honestly just be the YouTube channel slowing down in growth, or it could be the likes of working in the pub being a little bit more stressful as the Euros are ongoing. England final will be today as this video is uploaded, and the crowds have been rowdier. I'm not entirely sure, but I know that my health has been deteriorating in the short term. And right now, I understand a lot of you, and in the past, a lot of you have reached out to me saying, look, you've got to put your health first. And this time I'm going to be ignorant. I'm going to be unaware. I'm going to say, look, this is a short-term investment in which I'm using my short-term mental health to hopefully invest in the future. You might go, okay, what is this? What is this excuse that you're using to justify? Here's my idea. Whilst yes, now I could cut the position completely and hope that my stress might go, instead what I'm going to do is use this to learn. I'm going to use this as a learning opportunity. I'm going to learn, right, how do you deal with stress? What are the signs to look for? I've noticed I've been clenching my jaw more often. I've noticed I've been more tensed up in my arms and chest or back even, right? And so it's not from working out, because look at my arms. I don't work out clearly. But the point is that I can tell that I am more stressed than usual. It can't be caffeine because I've cut it down quite a considerable amount. And in fact, I'm drinking about 1 tea, 2 teas maybe a week. So it's definitely cut down. And so since I'm aware of it, I'm going to monitor it. I'm going to learn. And I expect that if it is the likes of Argo blockchain, that in 2 to 3 years time, hopefully they will be listed on the Nasdaq and the Texas facility is up and running, at which point then I would trim the majority of that position, and then hopefully the health impacts alleviate. So that then in the future, when I may take on more stressful responsibilities, be it through a career or be it through managing a larger online business than I am now, I will be prepared and ready for it. That's my delusion of justifying this investment. And yes, I did buy more shares. I tried to round it up to 4,000, but did it wrong, so it's now 4,001. I did this so it's more easily mentally divisible. This means that when I do trim back the position, I can just say, right, I'll sell 2,001 shares. That will cut my position practically in half, and I'll just leave that. I like that. It's an easier way to think about it, in my opinion. And that's one of the reasons I don't really like fractional shares, because it gets very complicated very quick. Don't get me wrong, Argo Blockchain has done fairly well, at least in their mining monthly report. They've mined 167 Bitcoin compared to 166 Bitcoin in May, with their margins remaining at 78% compared to 82% in May, which, don't get me wrong, this is very impressive considering the large difficulty drop from around about 100 petahash, I don't know, from 150 to 90. I don't know the unit, but it's quite a remarkable drop, and that's due to the shutdown of Bitcoin miners in China. In the future, I think I'm going to hold a very minimal position. As I said, the diversification is protection against ignorance. I really don't understand the underlying asset of Bitcoin. What I'll likely do, trim the position and hold 5% for the future, and then just let it sit, because this is a quality company. It's just my doubts about further shareholder dilutions and the bad taste in my mouth about management has certainly changed my views from a long-term hold to more of a swing trade view once more. Another stock I bought this week was the likes of Boohoo, which have actually dropped by 3.58% this week. Why did I buy more? Well, this is my second highest conviction stock in the whole portfolio, and I figure at the moment they're trading at a very low valuation relative to where I think they could be in just 3 to 5 years' time. This stock is a very quality company. Sure, there's lots of doubts at the moment as the reopening of the economy happens, and the likes of Primark is dominating the high street due to not having an online marketplace for their apparel. However, I've been buying from Boohoo lately. I've spent about £200 on their products. I'm happy with the service, especially with a returns policy that only took 5 days, including 2 of those days that weren't even business working days, which in my opinion is very impressive. I think Boohoo have got a very strong spot. Whilst I think their fashion is very forward, I do think young people of today are trying to look for that. They're trying to look for things that are trendier. They're trying to follow the trends, and so it makes sense. As for myself, I like to buy clothes that are perhaps more timeless, can last longer, and therefore in 20 years' time, I'm not going to look back and think, what was I wearing? Except about a year ago when I was wearing those horrid, colourful shirts. I bought more shares of this stock, rounded up to 2,600 shares, and I may buy more in the future. Yes, I am raising my average share price, but oh well, because in 10 years' time, that average share price may not mean much to me, and I may have wished I just bought more shares. Here's the big one. I sold Ashted Group. Well, only 50% of it. This week, they've actually increased by 1.32%. Yes, they were doing a massive share buyback scheme. Yes, there is US infrastructure stimulus worth a certain amount of $1 trillion. And yes, this is big for the industry. However, now I think is the perfect time, in my opinion, that I should trim the position and take profits, because I have little to no understanding of this sector. I can understand the business model, and it makes sense how long-term leases and such short-term leases can be very effective at managing capital, and especially in an industrial environment, the demand isn't really going to drop down anytime soon. However, that's a bit too consistent, a bit too safe for what I'm interested in. I know I mentioned the volatility of Argo Blockchain impacting my health, but I feel that I don't understand Ashted Group, and their financial predictions or guidance for growth is a bit low for me. Not because of a fault of the business, but rather because Ashted Group is a big company already, and I really like to look down in size. I sold 50% because why not? I had bagged, I'd gained 110% at least on the investment. Selling this takes profits, and I've now got that set. That's done, that's confirmed. If it drops now, at least it's just a free ride. It's running through money I've already made. I'm just gonna let it do that, let it do its thing. I may decide to trim back the position further in future. However, at the moment, because I'm unsure, I sold half, left the other half to run, and if it goes up, then I make more money. If it doesn't, oh well, at least I've locked in profits. You may wonder, what has happened to this cash? And now I have a cash position in the portfolio, combined with my dividend income from Games Workshop, which has actually decreased by 1.38%. My dividend income was £34.50. You may ask, why are you not reinvesting this back into Games Workshop? Reinvest those dividends. I would, and Games Workshop is my highest conviction stock in the portfolio. However, I'm not interested in reinvesting it into Games Workshop at their current share price. I think that in the overall trend, they're a bit on the higher side, and I am pretty much only speculating on this, but I feel there's a little bit lower I could get, a bit more value I could get before buying more shares. But don't get me wrong, without a heartbeat missing or skipping, I would love to buy more of these shares. So at the moment, I have a 3.9% cash position in my portfolio, equivalent to £956.70. There's also a fair amount of cash, a little bit bit less than that outside of the portfolio should I need to, although I've kept it outside of the portfolio mainly for the reason of that I might be saving to go on vacation at some point and money that hasn't been pushed into the stocks. You may have noticed that I've deposited a lot less than I would have done in the last year, and so that might be why the portfolio growth has been slower. I'm comfortable with this, and that cash position, which may not last for long, hopefully gives me an opportunity to buy some good value stocks, even if it just is a top up of my existing holdings. I simply do not have the self-control or the patience to have a long-term cash position, but I hope I can use it in some way to my advantage and buy a good deal. But I suspect that this is improving over time because my overall portfolio value is increasing, and because that value is now, there's more money working for me aside from myself working for the money, it means it's easier for myself to raise cash without feeling like I'm missing out by investing in the markets. If you're interested in my free UK stocks to buy in July 2020, then click the card at the top right of the video. Thank you for watching. I'm Foreman. Have a fantastic day, and may England win the Euros.